and welcome back to In Focus for this very special series on innovation. In this episode of In Focus, partnered by Sherlok, we're looking at innovation in the refinance space. To unpack how brokers can make better use of their time by adopting technology to make the refinance process easier and more efficient for them and their clients, we're delighted to welcome the founder, CEO, and former broker, Adam Grocke, to this episode of In Focus to unpack all of the efficiencies that you can take advantage of in your business. Thank you very much for joining us, Adam. How are you going?
Good, thanks, Annie. Thank you very much for having me as well. It's a pleasure.
Well, thank you so much for taking the time to sit down with us and unpack all of the things that you've been doing in the refinance space to help make brokers' lives easier. Now, we know from the absolutely hot market at the moment, there seems to have been no time better than now to help brokers take advantage of technology to free up some of the time that they're spending on delighting their clients. And we know from certain individuals there are things that are being done in the purchaser space, but not really traditionally, I don't think, a huge amount of focus in the refinance space. For you, just looking back at your career as a broker before you became the founder and CEO of Sherlok, I wonder, have you ever seen the market or the refinance market as busy as it is now?
No, definitely not. I mean, it seems to be a purple patch for the industry. I mean, and what some are saying are going to be the golden years for the mortgage broking industry, with both purchases being extremely busy for new purchases and the refinance space hotting up or being hot for some time now, which is fantastic. And that's even without interest rate movement. So to have quite an active refinancing market when interest rates haven't been moving up or down for a long period of time is quite interesting. So as we start to see interest rates moving, we're predicting that's going to increase the amount of refinancing activity that's out there. But I mean, it's a good time to be a broker. They're as busy as they've ever been, and they've withstood a number of changes, significant changes to the industry. So the resilience of the industry and the brokers that have stuck through all the changes with licensing to Royal Commission to bid are now starting to reap the reward for that and for that persistence. So it's really interesting to see where it goes from here. And I think the brokers that are going to really excel over the next 5 years are the brokers that are going to adopt technology to help them in their role and automate most of that process, because the more they can automate it, the more business that they can write as well. So, I mean, I think it's a fantastic time to be a broker and really interesting time to be a part of the industry as it goes probably through the most significant innovation and change that the industry is going to go through over the next 5 to 10 years.
Yeah, absolutely. And you mentioned there about the fact that obviously the refinance market has been so high, especially I think when COVID first hit last year. Everybody seemed to be refinancing either because they wanted to free up more equity, or they wanted to actually take advantage of a better cash rate, or they were just thinking about their finances more generally. But as we filtered through, I would have expected that refinance rate to have sort of fallen off a little bit now, because as you mentioned, the official cash rate hasn't really moved. What do you think is driving refinance activity at the moment, now in November 2021?
Yeah, really interesting question, because you definitely did see for some time that the cashback incentives was definitely adding fuel to the refinancing market. And for some people, when you think about that, an extra 4 grand to refinance is a lot of money, especially when people have gone through COVID and may not have the same level of income or full-time employment that they previously had. So that's extremely helpful for them. What we found through COVID as well is more people had more time to then focus on these things. So they actually, they're working from home, they had more time, they weren't traveling, so they could actually start to get their house in order. And it was quite attractive to move to an interest rate that's, 0.5% or 1% lower. What I think that also shows is that people have been quite lazy in their mortgages and allowed higher interest rates to be charged for a longer period of time. And I know the ACCC recently did a home loan price inquiry, which factually proved that the longer you're with the same lender, the higher your interest rate is going to be, and that gets worse and worse over time. So as the lenders aren't repricing those loans to a competitive rate, as consumers now become more aware of it, there's more reason for them to move, and the financial benefit of them moving is significantly higher as well. What we also saw is a lot of a lot of brokers moved really quickly to digital technology, so online meetings, and that actually allowed people to refinance more easily because the barriers to refinancing, the mental barriers, the psychological barriers of, oh, I've got to go meet with someone. There's a lot of paperwork. There's a lot of work involved. Started to get broken down, and they had more time, and also it was a lot more convenient to start meeting with brokers to facilitate a refinance. So I think that's been really interesting to see how that's played out. That also what we found is that the as soon as the credit pool shrinks, so during COVID, the new purchases, the activity in the market really shrunk. So the mortgage industry has always been a two-tiered market. You've got your new purchases and then you've got your refinancing. So as the lenders realized that the new purchases were starting to dry up, especially early on in COVID, they automatically turned to refinancing to try and get more of that credit pool. So it's really interesting to see that that was a clear focus, and that definitely drove more activity in that space. So the brokers that could pivot and move quickly with that definitely capitalized on that opportunity.
Yeah, and you made a great reference there to the ACCC home loan price inquiries. You were talking about finding that so many people are actually paying a higher rate because they've been with their lender for longer, they haven't been actively refinanced, they might not have an amazing broker yet actually sort of working on their behalf to do that for them. So there is a huge amount of opportunity here. You also made a great point there about technology and the fact that so many brokers are having to rely on technology to make much better use of their time because they're so busy. And we know that the turnaround times at the moment have been not where they should be, let's say that, for a while. I think while they are getting better, they've obviously been really impacted, not just for purchases, but for discharges too. We can see, discharges in some cases taking 40 plus days, which is really, really shocking for a lot of people, over a month to get your loan discharged and moved to another lender. I wonder what other kind of pain points you've seen have been occurring for brokers when it specifically comes to this refinance process.
Yeah, look, it's a really interesting one. I mean, the fact that discharges can take so long is, uh, how do I say this politically correctly? Is it's outrageous that something can take that long to process a discharge, and there's a lot of strategy and politics that comes into that. Um, Same with SLAs, to be honest as well. There are some genuine reasons at the start of COVID why SLAs blew out for turnaround times for lenders and banks, but as that started to go through and they rebuilt some of their teams onshore or their automating of processes, it's good to see them come back into some good order. And I think brokers are supporting the lenders that are looking after the broking channel, which is fantastic. In terms of other innovations, I mean, the discharge is one, having a simple, quick process, and probably transparent process for that. If a client's going to discharge, I mean, don't wait until that point in time for the lender to come through with a special offer. Get on the front foot early on because you'll build more loyalty and more trust with both the broker and that customer as well. But one of the big ones that we'd love to see in the market is really transferable mortgage insurance. I mean, it's one of these things that does lock a lot of homeowners into their current rate, their current lender for a long period of time,
Mm.
and most of them can't leave or switch lenders until they get to an 80% LVR or 85% in some cases. And that really puts a massive dampener on competition. I mean, those people, generally speaking, with a higher LVR, need more money in their pocket. So rather than staying on a rate that's 1% higher, and for longer, they could be on that rate for anywhere from 5 to 7 years, allowing them to actually, transfer their mortgage insurance is actually going to facilitate more competition. It's going to encourage more competition in the market, and I think that's going to be it should be something that should be looked at, and something that should be offered as well. Because if that is offered to the market, we're going to see more activity. It is consumer focused. It's a better outcome for the consumer, and gives them the ability to pay that upfront mortgage insurance cost, which they do pay, and actually carry that over to a new lender, as long as their risk profile remains the same as when they first got that loan. So I think that'd be a really interesting one to see if that comes to market and that product comes to market and that innovation.
I love that. And I think that's a great point, not one that we talk about, to be honest, very frequently. So thank you for raising it. I actually just really want to talk about as well, what else can be done to innovate. And we know that Sherlok was really focusing on innovating the refinance space. And from your background as a broker before you started Sherlok, I wonder, what was it about this process that led you to think there has to be a better way?
Yeah, there was two key points that I found in my journey as a broker, and the first one was really looking at. I think you kind of get that light bulb moment where you just go, I don't know why this is so hard. So it's a homeowner customer that I've been dealing with for so long. I understand all their information. I've got all the data to make a credit decision on here. They've got a huge monthly surplus, sub 80% LVR. Why can't we just simply move them? But we had to jump through all these hoops and all these credit assessment policies and procedures that were built around essentially the lowest common denominator, which is, is this person trying to rip us off? Are we going to lose our money? So what we're really doing is we're kind of reversing. Okay, well, let's actually reshape and relook at what that is. But that was one of the earlier frustrations is why can't I just simply move this person? There's a good outcome for them. It's really good quality, prime, AAA applicant. They should be able to move really, really simply, especially when all the data is there. So there's reasons why that hasn't been innovated because some of the banking systems are quite old and don't facilitate that. And also, we have just gone through tightening of legislation, best interest duty, responsible lending, which is all fantastic. But if you can prove that someone is a good candidate for a loan, they've met their repayments, then it should be really easy for them to switch between lenders and increase competition. So that was probably the first one. The second one was, I mean, as a broker, the whole industry is built around how many deals you write per year. So it's all this new settlements. How many deals can I write this year? And then those people then win all the awards. And what we realized as a broking business is we were writing really good upfront business, but we weren't focusing enough on our existing clients, which is our trail book, which is actually the most profitable part of a broker's business. Because if you were just writing or running a broking business on upfronts, it's actually not profitable. So that delayed upfront that the lenders are paying in a trail commission is actually really important, but that it stays there for a long period of time for the brokers if it's in the best interest for the customer. So we actually started looking into it because we had trail book drop-off. So we're writing really good business, but that wasn't compounding on top of the trail book size that we had. What we found when we did the research was that the number one reason people left to refinance elsewhere was purely because they realized one day their interest rate was too high
Mm.
and it was higher than what they could get elsewhere. And also, as a broker, they hadn't received meaningful, high value content from us recently or had a proper conversation. And what we found is all of our marketing efforts to the brokers was just actually desensitizing our customers because the newsletter, I mean, how many brokers talk about the RBA rate movement when there's just no value to that conversation anymore? But that's all the brokers were pushing out. So what we looked at is how can we start proactively repricing our clients to keep them on a cheaper interest rate. And if they're on a cheaper interest rate, then we've significantly reduced the risk of them leaving. So conceptually, it's quite simple. Okay, keep them on a cheaper rate, they stay with you for a lot longer. Um, the harder bit to that is going, okay, well, who's on a higher interest rate and how do we know if they're going to leave? And that's where we've actually built a lot of our machine learning and artificial intelligence. So we are actually predicting who's going to leave a broker now using artificial intelligence and machine learning and data insights. And that's getting very, very accurate now. So in theory, if you know who's going to leave and you know why they're going to leave, being a high interest rate, if you lower it, they should stay with you for a long time. But if the lender's not going to offer a lower rate, well, then that opens up the avenue for refinancing, and then brokers have a best interest to consider that and have that conversation with their clients.
Yeah, that's so interesting. And I love that whole idea of the artificial intelligence actually predicting when someone's going to leave. I mean, it's a little bit scary that you can do that now, but at the same time, super useful for a broker. How does that actually work? Is it done on they had this loan in 2017 and the average loan in 2017 was XYZ? Is it done on their behaviors? I'm just wondering how you actually even know that.
Yeah, it's really interesting. I mean, it's a whole new world to me, delving into machine learning and data science and artificial intelligence. But in its core, really what it is looking at data and what data can tell you about people's behaviours, both past, present, and moving into the future. So we do that by having a look at, okay, what are the different attributes for a loan? Both at a big data level, so big data research, okay, what's the average loan term for a loan, but also going really granular in that individual's personal financial position or scenario or demographics. I mean, and the example I use all the time is that um, someone with six young kids under the age of 10, is significantly less likely to refinance their loan than someone with only one child under the age of 10, because they just don't have the time or the financial means or the ability to, if you've got six kids and trying to manage that in your family household and then go and get an extra 0.5% off your home loan.
Mm.
Um, So really having a look at that and understanding what the data means and the data tells you allows you to then build very, very good machine learning models that actually predict, who's going to leave. And we look at over 150 different data points to get that information, and the messages that are coming through our system, the Sherlok platform, back to the brokers. It's quite amazing to see the messages where the clients are actually saying, we were just thinking about refinancing. I'm glad you reached out to us, and they would have been deals that broker would have lost if they hadn't had reached out to that client to reprice them.
Yeah, wow, it's amazing. And so, how does that actually work with the broker system? Because, like, I mean, if I was a broker sort of doing it, I was like, oh, I'm going to have to put in loads of information and, actually take some time to use this system. I just wonder, what does it do in terms of actually embedding into a broker's environment ecosystem already? And what kind of time or cost savings can it actually deliver?
Yeah, really good question. So one of the hardest things that we found early on was as how to get the right data, accurate data, and make it really easy for brokers. Because you can get the data you need, but a broker might have to spend a month of data entry to put it in there. So we actually spent 3 months building our own internal data capture process, and so we built that from scratch. And so what that does is that actually pulls the data of the active loans from the broker's system. So it allows us to pull the data into the Sherlock system, and then we can run the analytics and the automation around the repricing. So that allows us to then predict who's going to leave the broker, automatically reduce their interest rate by repricing them with the same lender, and then generating a refinance lead with that customer to the broker for them to then discuss refinancing. So we've also got our customer portal that we're launching, so the brokers can actually also invite their clients to engage in Sherlock and actually join the Sherlock platform with a portal for the customer that's branded completely as the broker. So Sherlock just
Mm-hmm.
sits behind the broker. We want to push out the broker as the hero because that's their job. They're the one who's got the trusted relationship. And so automating that's really important because if the broker can onboard all their clients in 5 minutes, they're going to use us. If the broker has to spend a month worth of month of time automating or giving us the data or inputting the data, then it's just going to be too hard, and the hurdle or the barrier for them to start using Sherlock is going to be too significant. So we spend a lot of time in that. So brokers will be able to sign up on our website and come on board within 5 minutes. And what we've seen from there's different parts of value from our platform. So you've got the time saving. So it takes about 60 minutes to do a repricing. So if brokers that are using our platform are generally doing anywhere between sort of 5 to 15 reprices a week, so there's about 15 hours to 20 hours that we're saving them just in repricing and managing their existing client base.
Wow.
What you're also seeing is all the communications automated, so they just single click and it will generate the email, pre-populate it all, and then it will send it off to the client, including SMS to alert them to have a look at that email. So that's been really good. And then on the refinancing front, with the customer portal, we're then automating all the fact finding, the data collection, the automation, so that we're going to save, we're hoping to save brokers anywhere between 5 to 10 hours worth of work per application by automating that and ideally bringing single click refinancing to the market, which is going to be really exciting.
So in terms of the repricing, is it actually then the system going and talking to the existing lender to say, can I have a reprice, or is it going to the broker to say you need to get in contact with this lender to reprice because there's a better rate out there? I'm just wondering how that side of things works.
Yeah, our system does all the heavy lifting. So we every week we generate a list for the broker. So we say, look, these are your clients, and the broker gets a notification. It's called a repricing queue. So it's a queue of clients that are at risk of leaving that broker, and if the broker doesn't do anything, that client's at risk of leaving them and moving away. So the broker just needs to come into our platform. They log in through their portal, and we're built around single click. So they single click to approve, or they can cancel that repricing request. And our tech in the background will do all the rest of the work. So from a broker's perspective, they'll get a notification. They come in, they look at the queue. They can send off, 10 reprices in the matter of a minute, and then get back to writing new business. And our engine will do all the repricing in the background. So we're taking that heavy burden, all that hard work away from them, and also their admin team. So their admin teams can help the brokers with new applications while our system's looking after their existing repricings.
Yeah, and I suppose this all goes hand in hand as well with the best interest duty is you're helping save clients money, but you also have that ability to override or not go forward with something if you don't think it's going to be in the best interest. So I guess you've still got that actual oversight from the broker itself as well.
Absolutely. And look, what we've learned, I mean, we're a tech company that's led by brokers' feedback. So our system is as good as it is today because the brokers who have used us have been giving us feedback on features and what they want. So a lot of it, the first version we launched was fully automated. So it'll capture the data, it would choose what to do, it would reprice them. And the feedback from the brokers is, hang on, that's just way too much. I need to know what's going on. I need to be able to control the system. And I may have had conversations with the clients that the data can't tell me yet. So that's why we built in these queues. That's why we built in our preview and edit functionality so the brokers can quickly preview and edit the email before it gets sent, or they can just send it off. So listening to our customers, being our brokers, and how they can add value to their customers is really what our focus is, and that's allowed us to build, I'm proud. It's a very, very cool system, and the brokers are loving it. So.
Yeah. Well, it sounds great. I mean, it's only been around for less than a year, I think, now, but we've seen a huge amount of people accept this and be like, finally, something to disrupt the refinance space. I imagine when you were broking, you probably were like, why didn't somebody else think about this for me rather than you having to go and do it yourself? Um, but I mean, you were talking about as well, like other things that you'd like to see fixed, like the portability of lenders' mortgage insurance, for example. Is there anything else that you think needs to be done in the mortgage or finance space to make it a more innovative area and for both either brokers or for their clients?
Yeah, look, absolutely. I mean, one of the things we're focusing on is this single-click refinancing. So how can we add value to data and leverage data in a new way to allow brokers and bring to the broker market single-click refinancing, and that is really going to reshape what a broker does and how they deal with their existing clients. You can imagine a 20-minute conversation with an existing client with data analytics and insights that gives the broker all the information they need for that key conversation, and then all the processing's already done. So instant credit decisioning, choose your settlement date, and away you go. So that really is something we're focused on to bring that to market, and we see it as being a game changer, changing a broker from an advice and processing house as lenders are pushing more and more of the processing onto the brokers with valuation and VOIs, automating all of that so the brokers can focus more time with their customers on high value conversation, and then again, servicing their existing or going out and finding new business. I mean, I think the other thing is really seeing the value of the data they've got and leveraging that to actually help their consumers. So at the moment, a lot of consumers are starting to use personal finance management apps, and they're using that just to categorize and see everything. And that's a real trend that we're seeing is going to increase over time. So giving those tools and that the ability for the brokers to do that and fulfill that role as well as getting that through an app is really going to be useful because a lot of consumers still want to have conversations with people. This is why I think the broking industry is going to be around and be very successful for a long time, because in human nature is when you've got a key decision to make, you want someone to validate you've at least made the right choice or give you some advice and act as a sounding board. And that's really where I see the industry moving to, rather than just being a processing business or a processing house. Having options is no longer going to be, your value as a broker, because the consumers have options on every single website they want to go to. It's actually who's going to have the trusted relationship, who's going to add value to the data insights that they can see, and who's going to give that consumer confidence that they've made the right decision.
Yeah, great, for sure. And just finally, Adam, before I let you go, and thank you so much for spending time today to talk to us about Sherlok and what else you'd like to see innovated in the mortgage and finance broking space. I just want to ask everyone in the innovation series this month, what does innovation actually mean to you?
Good question. It's a really broad um, field or definition. I mean, I like to think of innovation quite simply as you're changing something for the better as quickly as you can. And so the best way to do that is to understand where you want to go. What's your utopia? Think big, think 10 times. What's the best thing that's going to add value to your business, to your customer, to your staff, to yourself? And then what can you do today to take the first step to get towards that? Because quite often people get stuck in wanting to solve the whole problem at once. And you'll be amazed at how many times you'll be one or two steps into it and the problem has actually changed, or you need to pivot, or you've learned something you didn't know before that'll completely change what the solution is. So innovation is all about improving and doing that as quickly as possible, as long as it's adding value to someone, a key stakeholder, your customer, yourself, your business, or your staff.
Yeah, I love that. And thank you so much, Adam and Sherlok, for partnering with us for this episode of the In Focus Innovation Series. If you are watching and would like to find out more about Sherlok and what Adam Grocke has been doing, then do make sure you read the Innovation Station supplement, which is the Broker's Guide to Innovation, which is out in November alongside the Advisor magazine, to find out more about Sherlok and other innovation in the mortgage and finance broking space.